Welcome to Confessions, part 19, with me, your co-host, Chris Sweeney, and the man himself, the star of the show. He is back in his spiritual home, his lair of St. Bart's. Hugh Hendry, come in.
Hi, Chris. Not only the lair, but I've had a day and a half now. I've had 2 evenings staying at La Maison Blanc Bleu.
Good stuff. Well, anyone that's new to the show, we always start with 3 songs because Hugh's a big-time music guy. So we always start with sort of getting the headspace, the 3 songs that may relate to what we're going to talk about today. Now, Hugh's monthly, 2005, where he takes a quote from F. Scott Fitzgerald. And now I combined that with another famous quote, which is about there are no second acts. So I thought we'll pick 3 musical acts that have had a sort of a change of style, a comeback, if you like, and sort of appeared back. Now, first one is U2, The Fly from Achtung Baby, 1990, the first single from that album. Then we've got the Red Hot Chili Peppers, Californication, 1999. And the way back to 1980, Frank Sinatra's New York, New York. And all of these were sort of rebirths for these 3 artists in various ways. So which one fits the mood for today, Hugh, and which one would have been booming on the Eclectica Hedge Fund stereo?
U2. I am the fake Bono. How could I let that pass?
It's a musical analysis, and now you're going to do the financials. Is there anything this man cannot do?
Yeah, well, we're about to see his limitations. This week, literally, I don't even know what day we are. This is Thursday, I believe.
Thursday, yes.
So, what shall we tell me?
Well, Elon Musk, I think, has got to be featured today, surely, because he's all over the place at the moment. What they've decided, they're no longer accepting Bitcoin as a method of payment because they don't like the emissions that Bitcoin causes. Because you have, what do you make of it? Do you think it's a legitimate take? Do you think it's a publicity stunt? What's your thoughts on it?
Well, what are my thoughts? Incredulous. You can't tell me he didn't know about the energy consumption.
I think we all did. I mean, it's no secret, is it really?
It's no secret. As we know, the mining those coins, so that they have built in. It's meant to be a finite supply. That the preeminent attraction of Bitcoin is that it's not plentiful. The dollar is plentiful. They print more and more of paper dollars. It's easy to do. It's a crazy love cult function where we just believe. We believe in dollars, either paper or on your telephone, and they're created pronto. So it was built to be very hard to produce new coins, new Bitcoins. And so it's the mathematical complexity of solving equations. And I'm not an expert, but obviously it consumes more than the electricity of the Netherlands, which is a rather large European country. So really the explanation begs further and further questions, because clearly he was aware of that. So what actually has changed behind the surfaces? For me, more importantly, it's been very hard to, we have for the last 2 months been going on about, hey, listen, buy carbon credits. And here there is clearly this green revolution. The society has judged, it has decided. Society, we go back in finance, which I like to go back to then be able to extend my vision into today and beyond. But going back to early 1930s, when the US financial system went bankrupt, society made a judgment and it said banks are too risky. And for 40 years, they kind of kept this screw, this clamp on the banking sector, said, don't you dare be risky. So society imposed its belief and desire for change, and that was maintained for 40 years. It was maintained until most of those zealots who had imposed it had largely died. And then the banks woke up, and I'm sure we'll discuss banks later, and they started inching a little bit further and further to taking risk. It's kind of like that now over the last really since the invention of Bitcoin, but the last 10, 15 years, society really has got it between the bit between the teeth and said, this, we are telling you what our society, what our economy will look like, and we will have zero carbon emissions. It's going to happen, as it's definitive. And the consequences of that are that, we're seeing it writ large in the stock market. We see it with Tesla electric cars. And of course, we've tried to go more opaque and into the system and into the suppliers of Tesla and all the other, there's one thing to express that desire and ambition, there's another one to furnish it with reality and practical applications. And in future episodes, we'll talk about changes, I think, in the nature of chemical companies and chemical solutions to some of the environmental changes. And yet it was very hard to say anything bad about Bitcoin. And the point is, Bitcoin is very, very energy consumptive. It just doesn't fit in. It's like launching a really risky investment bank in 1936.
Yeah.
Bitcoin is a really risky, it's like launching Lehman Brothers in 1936. It makes no sense. It has made no sense. And for the last 2 months, since the end of February, Bitcoin peaked since the end of, and it actually is kind of, people go, no, it didn't. You saw higher prices, but momentum peaked. Bitcoin is a beast. And the thing that's terrifying about a beast, the thing that terrified people from saying, but it's really filthy, it's being manufactured by Chinese miners, right? So the supply of Bitcoins, a large component of it, maybe as much as 70%, is coming out of China. And I don't like that. It's like, I don't mind buying a pair of socks, a pair of boxers. Bitcoin had lost momentum since the end of June. So we should look at that.
See bar chart. Yeah, so for anyone listening on the audio only, remember we also use a visual thing here. So Hugh's brought up the bar chart of Bitcoin, and he's now going to talk us through it. And so
I was saying by the end of February, so somewhere around about this period here, Bitcoin that is as a speculative asset, the great crime is to go sideways, i.e. to lose momentum. Bad things happen in that sense. You're no longer controlling the pace of things. So Bitcoin had been explosive, had gone from 10,000 back in, where are we now? We are in October. So over 6 months, 10,000 to 60,000. And dare you mention that it had a carbon footprint problem. So there's nothing terribly untoward. This is something that was surging higher, sixfold in 6 months. So, putting on 10,000 per month, clearly that was unsustainable, and clearly it's taking a rest. I had been on record as saying that I'd be interested that I'd have no problem buying Bitcoin, but I felt like I would need a 3 to start the number, which is to say buying it in the 30,000s. And that seemed an impossible ask. And now it just seems just a little bit less impossible.
But one question, Hugh, about what Tesla are doing, are they trying to boost their ESG credentials and give their company a boost because, they don't really need Bitcoin to make them a lot of money? Or is it just being contrary? Because it seems odd to buy 1.5 billion of an asset and then talk it down.
It's real ass over head over ass, foot in mouth. It makes no sense. Like I say, it's not like we just discovered this. These were well-known, articulated points. Now, I'm just thinking also, but it's not insurmountable that you can make, if you will, clean Bitcoin. It depends on the source of the electricity, and again, that's why we had an episode not way back, but a few weeks back, where we were looking at the surging price of hydroelectricity power stations. And in fact, last week's episode, Chris, where we had Energex, which is a renewable energy investment trust or income trust, which owns wind turbines, solar, doesn't own nuclear. I don't believe it owns nuclear, but it owns a lot of hydro in Canada. Bitcoin, if you will, from that source of energy would be fine. But in terms of what Tesla are up to, I mean, Elon is a crazy genius, and this is part of the crazy. So just beware when you're relying on others to kind of control the destiny of your price chart. It's kind of it leaves you subject to reversals. But I keep saying you really come to understand a speculative asset when you can buy. No, it's not necessarily that you should buy more on a massive correction, but it's what I found 15 years managing money was it was so easy to buy things going up. And indeed, that's what I profess to do. But you try and cultivate buying things where they have reversals, but within an overall higher price pulse. We have previously looked at, let me bring it up again. So these are monthly charts, and then these little lines that you see, the yellow, the orange, and the red would be, I think that would be 20 months, 60 months, and 250 months. Because normally I look at 21 days, 63 days, and 252 days on my moving averages. And so when I switch it to monthly, then these averages switch out that way. And let's see if I can find anything. Like here, and again, there's been some correct pushback. I do not have a Bloomberg terminal in front of me, and I have to curry favors from dear friends to do these things on my behalf. And it just so happens that this chart package was put together using a linear graph on the y-axis, and of course, logarithmic axes are far better. But regardless of a linear or log, when you find the spot price, and this would be the spot month, and we're looking here at Schneider Electric. So again, this is something which is surging higher. I suspect the principle being the Internet of Things, and they make electrical components. And so this Internet of Things, where you're going to have semiconductors in your toothbrush, there's going to be circuitry that they would provide. But you see that the monthly, the current monthly spot, if you will, is about 136. And if you will, the very, very slow mean average for the price increase is more like 46. So it's 3 times above. So if you will, there's the tortoise and the hare. The tortoise is saying, hey, listen, over the last few years, this was a kind of so-so company, which is the market has got really, really excited about. And the hare saying, yeah, we are really, really excited. And my experience is, will Schneider come all the way back and join its 252-month moving average? Even that sentence is preposterous, but will it sustain a 3-fold deviation, positive deviation to its long-term averages? Unlikely. And so the test of character, it's not of understanding, but the test of character is to be able to buy. So with Schneider, it is conceivable that it could trade at 99, if not 80, if not 75, if not somewhere around 60. And it would mean, I place great virtue with messages and understanding from the marketplace and trends. But that understanding is, or the signal, it's a modest signal. It's all about the intelligence to analyze things and perhaps even more importantly, emotional intelligence to make sure that, it's easy buying Schneider here. Like, I don't know where that is, 99. It's easy buying it at 105. It's really easy buying it at 120. It's really easy buying at 125. Crikey, it probably is really easy at 136. But when it's that easy, it's probably not that profitable. So that's why on these charts, I was, so like this one here, we're looking at SAP, and I've mentioned SAP in passing in previous episodes. that's kind of where it is, where you don't have this surging deviation, positive deviation from its long-term trend. That's something where I would be more willing, if I had the analytical intelligence, I'd be more willing to open myself up to having more risk, which is to say I kind of have more of, if I knew nothing about these things, I'd have more of SAP and less of Schneider, just from a kind of an emotional overdubbing of what I'm trying to do in my comprehension of markets.
But that's your style, isn't it? I mean, that was always your style. It wasn't so much, obviously the business was important, but you took a lot from shapes and looking at trends and looking at charts, and then you would investigate the business. I think we've said it before. You weren't a person that found a business, then looked at the chart and found the shapes. You found the shapes first, then look at the business.
Correct. Yeah. I mean, sadly, we didn't give it enough time, but for me, one of the most demonstrative examples came, I think it was in the January letter of this year, 2005, where I had charged my analysts with the responsibility of finding out more about Weir Group, which is a manufacturer of pumps and valves and largely involved in the construction in oil, gas, and mining extractive industries. And the chart was telling me I had to own it, but the analytics were profoundly challenging. They weren't saying it was a bad company. In fact, the opposite. They were saying this is a supremely well-managed business, but in a kind of graveyard industry where it's been kind of slow death for many years. And so it was valued logically. I think it was making 12% operating margins at the time, and was probably trading on about 150 to 160% enterprise value to sales, which is to say, if you take the market cap plus the debt or any net cash, and then divide that by the sales, and given its historic growth record, that would be a full valuation. And yet my charts were telling me it was going to double, triple, quadruple, all of which it did. But you had to have the sense of wonder and curiosity to embrace change. And what I was beginning to learn from this sheet music that the markets provide you was that the oil price, which at the time was maybe $45, oil was going to the moon, baby. Oil eventually hit $150. Now, it hit $150 in the most absurd circumstances in the summer of 2008. I just wanted to check. So we were talking about the timing and the participation and taking risk in stocks and having that kind of emotional kind of savviness to recognize good times, bad times. And so I've just come back. You can see the Bitcoin chart. I hope you tell me.
Yeah, we're back to Bitcoin.
I'm going to put that on max, and again, not hugely overextended on that monthly basis. Today's price 50 versus 13, but I still hold that it could the price could kind of half. So I still maintain low 30s would be possible. And again, success in investing. And what was the franchise of my business, my macro business, which was Eclectica, was constantly in our life, we are presented with the question, who would have damn thought that could have happened? Okay. And this is one of those moments, like everyone, I woke up, I sat on the loo, brought the phone out, headlines overnight, emails, and I see Elon is like, oh, I'm out. I changed my mind. Sorry, guys. Now, again, there's a form of genius, and I try to practice it, which is to be able absolutely to not to deny, but to go against, to turn 180 degrees and disavow everything you said the day before. And that's that. I was a trader like that. I tried to have the emotional resonance to cut fingers off or cut feet off, and that's why. And I think in this monthly that we are meant to be speaking. Do I mention that actually? Let me just check. Do I mention?
Yeah, you do. Ours is a strange portfolio, 400 odd positions, and yet no diversification. So what gives?
That's it, and you can see that, yeah, because am I
Yeah,
sharing?
you've highlighted it on the screen. Yeah,
highlighted that.
Yeah.
So 400 positions. That was the ability to say you know what? I changed my mind. Boom, you're out. You know what? I'm sorry. I know we kiss, I know we hug, but you know what? Boom, leave, And Kate, hey, stranger, come on in. This is very misogynistic. Sorry, apologies for that. But you know what I mean?
Man. Could be a man. When you said, come on in, we don't know. Anyway.
Anyway, so Elon, because he is a genius, he's like, you know what? I didn't know. Shit me. I should have known. I'm a really smart guy. But, I'm building space rockets. I'm building these fancy cars. Bitcoin seemed like the economics of it sounded clever, but, the environmental kind of carbon footprint, okay, I changed my mind. But for the poor souls who bought Bitcoin at 67,000 because Elon's in, it's like, oh, Putin, I got to do something about it. And so what have you got to do? You just got to not be the ass that just kind of go, hey, it's going up, 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 up. I mean, I keep saying that. I have a Scottish accent and now I'm speaking animated and quickly. And so what am I saying? Because let me reduce it again to principles. You should kind of buy things going up. You should kind of sell things going down. Yeah. One of the great, we'll come to it, and I think it's quite soon. I had a short position in Google. I hate myself. I am immense. Me today, if I was talking to me of the person who had that position, I'd be like, come here, put-ching. What are you doing? I'm short because these three very, very good reasons. Chris, what are we going to say? We're going to say, shut up. We're going to say that is the conceit and the arrogance of a well-formed
argument. Yeah. Yes.
The number one principle is don't mess on the short side with things going up. Wait until they start going down. Okay. And it's the same thing. Buy things. You like it? What do you mean you like? Don't tell me you like a tobacco stock 3-4 years ago. They've been going down. Shut up. Okay. But phone me. Okay. Phone me when it starts to going back up. I say tobacco because, again, we never have enough time for these things, but I am very intrigued about tobacco, but again, I'm all over the place. So buy things going up. Just pace yourself and try and take a lot of risk exposure when they've had corrections. What is a correction? It kind of depends on the volatility, but Bitcoin has been very, very volatile. The volatility, I think 3-month annualized volatility up until like the end of February, but from that period from August, September last year into early February, annualized vol was like 80%, something like that. It can half and it can reveal nothing about the underlying state of the asset. So when it does that, when it's natural and it has these kind of ticks, then you say, okay, I understand this, and I'm going to open myself up to maximum risk. So I think there will be a point where you will see that with Bitcoin. So no more on Bitcoin.
Absolutely. Now, do you want to talk about steel? Did you want to talk about the housing market? Because a lot of people seem to be pumping money into that. Where did you want to take us on this journey?
Let's do steel because
do steel because last week we were going to do steel, but we ran out of time.
And steel, I think it allows us to continue that theme somewhat. And I'm going to share another document. I think you still see the Eclectica, yeah?
No, we see Lex Financial Times with some red. Someone's been on a fury with red. That looks aggressive. If you're doing when you do serial killers or murderers and you look at their handwriting, that looks like a frustrated man or a frustrated person that's done those red lines.
We're looking at the Lex column.
Oh, the Lex column, yes.
And I just saved it in a PDF format. And so these egregious red crosses that I put are just eliminating the other art. Lex is something which will typically have a feature on about 4 or 5 different stocks. And so these aren't relevant to what we're talking about. So that's why.
Oh, I thought you were saying they were rubbish. Right. Okay, fair enough.
No, now you see, I've highlighted. So it's an article entitled China Steelmakers. It isn't easy going green. So actually, Chris, this is genius. And again, I do think you are some kind of evil scheming James Bond villain, because you seem to be able to pull it all together. I'm like a puppet, Boom, boom. I just take your command.
I'm the Kaiser Soze here.
Kaiser Soze.
I look like the idiot. But I'm actually the evil genius. I don't know if that's the case, actually, but I think I might be giving myself far too much credit there.
So, again, you were saying Elon had warned us back on his posting on Saturday Live. Here we are from the 27th of April, and the Financial Times, the Lex column is warning us, because the principal focus of this piece is that electricity production in China is typical at low grades of iron ore, and it comes from an electricity supply which is coming from burning sulfuric coal, and what this struck me because Lex is very visible, and it's a conservative newspaper, and at the end I found it remarkable where it was very, very adamant. It says investors must avoid stocks and bonds from Chinese steelmakers. I mean, there's no prevarication, not the word, is it? There's no subtlety there. It's like, you must not do this. And the presumption is, it's not like you'll be an idiot. It's like you'll be a bad person. Elon's
doing, isn't he? Or Tesla, because they're wanting to distance themselves from that and keep the reputation of Tesla going. Because again, they don't want to be seen to be in league with people that are polluting, because their whole business is generating electric cars which are clean. Yeah,
I think the Tesla is the solution, and then to take the talk about filthy lucre, people is, but there is a paradox. You are without a doubt making the returns on your commercial endeavors, your profits, your returns, you're making them filthy if you take this green endeavor and then hold your profits in the form of Bitcoin. That's just an inconsistency, and it has been outed. Anyway, that article, I just put it to bed, but it was saying that actually I must go back to it. China has to it really has to be looking at cutting 550 million tons of steel capacity, to find rectitude.
But that's going to play into letting cleaner steel producers. So those clean places could now take out the China steel producers if things carry on in this way, as that column's saying. No.
Well, two things. I have to say, I was completely gobsmacked. I was incredulous that actually, and China's one of those places. It just challenges and wins all the time. They came to pass that they actually used all of the surplus capacity of steel. They internally consumed about 1 billion tons of steel. However, you're right in terms of looking at it, opening the visor up to the rest of the world. The mere prospect of this 1 billion ton monster just sitting there that at any point, like a dam, could just flood your market, right, meant that being a steel producer in the rest of the world really sucked. Really was the last thing you want to do, right? And so that's I'm getting excited again, because the charts are telling me that, and thanks to your conducting the puppet, you're right, because that threat, this 1 billion tons of steel, has this nuclear bomb. We've decoded it, and it ain't coming our way, right?
Yeah,
because really, the green component of all of that steel production, I'm going to guess here, but the Financial Times said is 50%. You need a 50% haircut. So it is no longer economic. There is about 500 million tons of steel production in China, which is no longer relevant. It doesn't exist. It has been
superfluous.
It's been put out to pasture. So that is very relevant. Because we hinted at this, that Europe, with the imposition of carbon taxes, that it in terms of fairness, it wasn't fair to hit steel makers with these extra costs and then just accept that product would come in via exports. So it's not necessarily a trade. I mean, it is a trade barrier, but it's a barrier. It's an environmental trade barrier, which kind of seems overdue. So again, ideas, but really, and again, apologies if you're listening. We got to look at that. We got to look
back into the matrix here. We're getting back into the matrix.
So U.S. Steel is just a big, like the worst. Not the worst. It's not the most obvious company you'd want to own. In a world, since 1998, the stock market, I'm going to regret saying this, probably gone up at least 5, if not 6 times. We'll look at that in a minute. And this is largely the same price. And if we had looked at it 6 months ago, the price of US Steel had actually, where is that? We'd gone from about 25 and was trading at 5. And let's full chart that. And I think it was 1998, Chris, that US Steel chart had begun. So 1998 is 1998 is somewhere about here. Let's call that 1,100. So the S&P's gone up 4-fold since then. So to put that in context, stop sharing for a second. In an environment where the S&P had gone up 4-fold, and even then had major corrections, major stock market crashes, the technology crash 2008 and COVID, it hit point to point. So point to point, without the drama, it gone from 1,000 to 4,000. And point to point, 6 months ago, US Steel had gone from $25 to 4 or 5. Right. So the market telling you the market's telling you it's the Chinese kind of shadow sitting there, and now that shadow is lifting. And so again, if I go back into those charts and I bring up US Steel, you see, of course, that's the S&P, but if you recall, you can see that US Steel has now rallied 5-fold, gone from $5 to $27. Would I do anything with US Steel just now? No, right? But what I would do is I'd look at Nucor, NUE, which is another American. And now this is a kind of a younger workforce, electric arc furnaces using a lot of recycled steel, lower cost, more dynamic, kind of finger on the pulse. And this is everything I like about stocks, because
this is the kind of people that have their lunch in a beanbag.
It's your intelligent man steel producer.
Progressive man. Yes.
But again, you see, but steel is subject to cycles, and charts and sheet music just reveal the cycles, because here we are. There was, steel was a miserable business in the 90s, been a great business in the 1980s when the decade of the 80s, the US recovered. The 70s had been hell on earth, and the 80s was all about, we're back. Let's fix things. Let's build things. Let's sell things overseas. And you needed some steel. And then there was a hangover, and there was the savings and loan fiasco at the beginning of the 1990s. The housing market was weak. The economy was kind of in the doldrums. Where it was kind of taking off was the Amazons of this world, the internet. And guess what? You didn't need steel. We created a virtual economy that didn't need steel. And so you had a passage of time, 10 years passed. So obviously if you're on the podcast, you can't see this, but from about 1994 to 2004, Nucor, despite being a super smart, good kind of producer, low-cost producer of steel in America, its price had gone sideways. And worse than that, it had been subject to oscillations where it had, over the course, it had fallen from like 18 to 7 back to 18. So it'd been a torrid time. And then boom, makes a new high, always 10-year new highs. We're always interested in that. And because it's a portent of change, of positive change. And sure enough, that Nucor was to trade at 18, surged to 80. So it went up the best part of 5-fold, right? Why? That was China. That was China becoming the behemoth that it is, like breaking into the party, going, hey, like imagine this enormous gorilla, like there's this party going on, it's all kind of funky, it's late on, but it's busy, it's hot, it's sweaty, and then suddenly there's an enormous gorilla going, hey, oh, it's going to disrupt things, it's going to knock over a few glasses. People kind of go, who invited the damn gorilla? And he's so enormous that this room's not big enough for the gorilla. And it wasn't big enough in the sense that it exposed that people hadn't been investing enough. We've talked about semiconductors before. Markets kind of, they're so mean. They're worse than kids. They're like, yeah, can't F off and die. Like they just investors lose money for it's typically their own emotional misfortune, but they bear grudges. It's like, I hate semiconductors. If we were to look at my monthly, I'm sure it reveals that back in 2005, what was my short position? My short position. There you go. ASM lithography. Oh, and I'm short Google. Shame. I did warn you. There is the confirmation.
We're still screen sharing. We can't actually see the confirmation. Are you showing us the confirmation?
Oh, sharing is paused.
Right, there we go. We're back to Hugh Henry.
Right. Where were you when I was ranting and raving?
We're still watching this. We're still looking at Nucor. But we're taking it in. It's an interesting business. We're taking it in. There we go.
So now you see that. So this is the OD Eclectica Fund as of 31st of March 2005. And things are fine. We pulled back 2%. I think we were up 8 or 9 the previous month. We've taken a lot of risk off of the book. The equity exposure had been 200% the last time we looked at it, so it's more than halved to slightly less insane levels. And this has been a common feature in these monthlies, that I've typically had a short position in a semiconductor business or group of businesses, and I've had short positions in US financials as I was kind of seeing the tea leaves that would come to haunt us in 2008 or profit the fund. And then I just got this insane short position in Google. But just to put that in context, we had looked at, these damn adverts. Let's look at Chris, you can see I'm in another chart function.
Yeah, you're in market screener now. Yes, yeah, we see you.
And I simply want to show, because we had this large short position in ASML, and that was in 2005. And I just want to explain the kind of how nasty and fed up the market can be. So 2005, I want to say, is somewhere around about 2005. 2005 is about there. So ASML, at this period, if you will.
What is the ASML for the non-initiated?
I have no idea. The lithographic photo electron printing. It prints circuit boards, which is an injustice. It is the Rolls Royce of putting as many kind of like intelligent nodes onto a circuit board. Like, don't ask me these things. I just buy things because they're going up. But kind of a bit new. So this huge surge was everything technology, and then it all crashed. And then so I'm saying that left this crash when ASML fell from 50 to, that'd be pennies, 50 to probably 3. This is a log chart. You see the log scale, and it's a better representation. But so 50 to let's call it $3. So the market's like, I hate you guys. I'm never going to invest again. And of course, there is a counter trend rally because 3 is just silly. And so I start shorting it once it starts falling again. So somewhere around about here, I've got a short position. Not a great, a lousy short position. I wouldn't have kept it because you see it then did rally. But over the course of 10 years, it could have been found again pretty much at the same price. And then the facts changed, and you could have. So I would say to you that the US steel chart that we looked at is probably kind of here, but it's a very weak signal. And for me, ASML would have been a very strong signal when we finally took out that 1999 March 2000 high, which was 2014, which was about $50. And it's like, but here, like, you waited for it to go from 3 to 50? I'm like, yeah, I did. Because I waited for the signal to become potent. I'm a paranoid schizophrenic. I hear voices in my head and it leads me to take actions I do stuff based on the voices in my head. So it's kind of better for me to kind of wait to make sure that the voices are kind of stronger and potent and sensible and smarter, rather than just the crazy nonsense that kind of occupies most of that space. So yeah, 50, I wait to 50, not 3, if you will. But my reward is still, I make 10 times my money. Why? Because over this whole period, so this period is over 15 years, there was a disillusionment with semiconductors. People didn't want them to print, to build more capacity. These guys are at the forefront. Like, when you need to build a new semiconductor fab, then you need to spend hundreds of millions of dollars on their product. The market has told you, no more fabs. It's not fabulous. So your business, a bit like Weir Group and its pumps for the extractive industries, it does nothing. And then suddenly you get a price high and boom, boom, boom. So keep that thought. Let's see if I can why don't I put Nucor into this chart package, put it onto Max, and we've got to take this technical analysis off. And so you see, new high, which we discussed, was about 18, and it goes to 80. And now what's exciting, you just see that little kind of green sort of thing there. New high, folks, new high. 12 years of going sideways. Wow, that's just, and we know the reason, Chris. The reason is we've just, I nearly had the word there. It's not stockballed,
mothballed.
Mothballed. We've mothballed 500 billion tons of Chinese steel. Baby, you're gonna buy. I sound like Jim Cramer. Baby, you're gonna buy steel. Steel is a steel. It's steel.
So basically, we've taken Elon Musk's theory, or not theory, but pronouncement on cryptocurrency. And by looking at that, we actually deconstructing what he's saying, why he's saying it, although it's pretty obvious, if we apply it to steel, that's where the real opportunity could be here. So now's the time. If you missed out on the Bitcoin ride, this could be now your time to get into the steel ride, because you may see a similar increase the way Bitcoin went. This could be the time.
Bitcoin is a one-of-a-kind explosive.
Yeah, but you know what I mean? Tesla, or this sudden appreciation. This could be the start of the steel boom.
Yeah, I think there is this is all a world of probabilities. There is a good, better than even's chance that you could, like, not just make a bit of money, that you can make 2-3 times your capital. That kind of 400-leg caterpillar kind of creature. Nucor is kind of like, we're at the best. We're at the best of what we can find here, right? And so, again, we've discussed this previously, Chris. I don't think Swedish steel company, and we had reflected on its price chart being very, very appealing. Stainless steel. SSAB. Forgive me, just so much clutter in my mind.
SSAB. Yeah, that's it. SSAB, a Nordic and US-based steel company.
Exactly. And it now owns things like it is consolidated. I think it's got a bit of Rautaruukki inside it. And so again, we want to go Max, and we want to, there we go. And we want to take that technical analysis off. And
again, they're starting to go back up as well, aren't they? But although they've been falling, but
you've broken this downtrend, and you've broken it a few times. The thing, I'm waiting for it to take out the intermediate previous high from 2018. So I think the present price is about 44. The next challenge would be around about 50. Then it's going to be about 65. I could conceive of a world where this goes back to the high of 320, which is to say that would be like a 5-fold increase. And if it were to do that, it may even go higher. You can then look at sort of like Thyssen, and forgive all. I know we have a lot of American viewers and Australian here. My thing is I did European funds and European stocks. I know a lot of European stocks. This is ThyssenKrupp, so German And it's been the worst of all. This has just been, the market's hated the stock for the longest time, as you can see. It looks like it's the US steel chart written large. And I bring it up simply because, like US Steel, like Air France, like British Airways, like these incumbent flag carrier airlines, they've got such enormous pension liabilities that they like the staff just stay forever so that they get the benefits. And so you get grannies with trolleys going, would you like another glass of wine? And it's like, yes, if it doesn't kill you in the process. So not only have you had this 500 billion tons of Chinese steel that at any point could imminently wipe you out, you also you were overstaffed, and you had this enormous pension liability. And at the same time, interest rates have consistently fallen, from around about the technology crash, they were about 5%. And they fell all the way to 50 basis points. In Germany, interest rates, 10-year rates are minus 50 basis points, if not more. What that means is that inflates the value of the liability. So you've had a business which has been compromised by the Chinese, and you've had a liability which has done nothing but expand to epic biblical proportions, which is to say it's the worst of all things. Life changes. And so I thought we would discuss it today. We won't discuss it today. The market is in the midst of going, interest rates are going up. We had this stupid inflation print. Stupid in the sense that it's a high headline figure. And it resonates well with the fear that people are going to spend their COVID savings, and prices are already rising, and we're going to see lots of inflation, and therefore interest rates will have to adjust. And the Fed saying, there's not enough evidence to warrant any such measure on our part, and we're going to wait. And I find myself in one of those odd circumstances where I'm like, the Fed's right. These are not the circumstances. It'll take at least 2 years in order to substantiate that. Anyway, maybe we'll discuss it next week. It looks like stock markets are going to have, we went through those stock rotators, and the deviation to long-term trends is immense. And there's nothing wrong with markets that can fall 10, 15, even 20%. And we know the stocks to buy, Chris. Steel stocks, gold stocks, silver shares, uranium stocks, and a lot of these smart, clever componentry that will enable the green technology which is happening around us.
Yeah, and if you wanted to see those two over the previous 2 weeks, Hugh actually did more in depth. We actually took us through the stock chart rotator, didn't he? The Hendry stock chart rotator, and he gave it to us. Essentially, it was porn. Yeah. Porn is what we were describing it. Although I think we may have changed that title because YouTube weren't too impressed. But, between us, it's porn.
Yeah, so if you are visiting the YouTube page, I've decided that my very oblique titles, Chris is not happy about it, but I'm prostituting myself. I need attention. And so putting out, like last week's title had been, I Believe, and Confessions from February 2005. Now, if you've never heard of either Chris or I, it's not much of a teaser, I believe.
Oh, I don't know. I believe it's, under promise, over deliver. But anyway, we'll see how it goes. And before we leave, I wanted to leave a quote from The Fly, the lyrics of the U2 song that sum up this episode, because I think it really ties into investors and, the way the market is and all things happen. And it goes, "It's no secret that a conscience can sometimes be a pest. It's no secret ambition bites the nails of success. Every artist is a cannibal, and every poet is a thief."
Love it. Like a thief in the night, see the world by candlelight. But I wish I was quoting Chaucer or Shakespeare. Instead, it's that Iris Egypt with the sunglasses.
Anyway, people, I think we'll sign out. And we'll say goodbye. We'll see you next week. So it's goodbye from me, and over to you, Hugh, to sign us out.
Oh, thank you. I mean, I didn't have time to be spontaneous today, and so we were crazy today. Next week, we'll get it back on track. Thank you very much.
you.